How will businesses and government policy change? Will attitudes be different? The post-COVID-19 era may be a time of uncertainty, or it may not. It depends on how we orientate our relationships with life, community, workplaces, business, and the global stage. There will be a change, challenges, and yet opportunities. Let's hear what one of Malaysia's most recognized women leaders, Datuk Yvonne Chia, has to share in moving forward. Now, for some of you who may not be familiar with Datuk Yvonne Chia, she is a senior fellow chartered banker, mentor, and transformational leader, has over 40 years track record of leading large banking organizations. She is known for her energetic inspiration for change, openness, and learning values that drives her personal and organizational success. She has been a trailblazer for women in financial services in the region and was the first female commercial bank CEO in Malaysia. After a successful 15-year stint in an American bank, she joined the local banking scene as Chief Executive Officer of RHB Bank from 1996 to 2002 and Hong Leong Bank from 2003 to 2013. She led both institutions to become high-performing banks in Malaysia and regionally. During the Asian financial crisis in the late 90s, she played a distinctive role in shaping the Malaysian banking scene with industry mergers and acquisitions for two banks. She is highly feted by the industry and organizations for her contributions. Amongst the notable ones are Forbes Asia's 50 Women in the Mix 2013 and as a finalist in CNBC Asia's Business Leader in 2009 and 2013. She has demonstrated strong stewardship in providing vision, focus, and execution to achieve success in greenfield markets and high growth turnaround operations. A proven strategist and influencer mentor. She has a strong understanding of relationship management, governance, and engagement with partners, customers, staff, and the local communities that she serves. A keen promoter of education, talent, and personal development as tool for empowerment for entrepreneurship and financial independence. She is particularly admired for her agility to move with changing times, her grounded style of walking the talk, and leading the way forward in the language of the audience of seniors and young and millennial, of seniors, young and millennials, sorry. She is currently the non-executive chairman of Standard Chartered Bank of Malaysia, Standard Chartered Sadiq Berhad and Cradle Fund Sdn Berhad, and sits on several listed boards in Malaysia and Singapore. She is also a trustee for Teach for Malaysia and the Merdeka Trust. Wow, that is amazing and inspiring. Well, thank you, Dato, for being part of this session with us today. Now, ladies and gentlemen, without further ado, I shall leave the floor for Dato Yvonne Chia. Dato, are you there?
Can you hear me?
Yes, we can hear you.
Okay, thank you. Thank you. First, hi everyone, and thank you and hi to Professor Dr. Paul Chan and Datin Chan for having me here today. This is a topic which I thought would be very relevant. We all have been very inundated by all the news that we can see across social media and the TV, and in fact, maybe it's reaching saturation point. But what I'd like to do is share and talk a little bit about these nights temporary and providing a perspective from the ground on the evolving situation and the implications for you and me in particular. Where are we all heading in the near future? How do you and I personally respond? What do we do? So I will talk about the macro level, economics, the role of the government, policymakers, the future of jobs, understanding the income divide across the globe and in Malaysia, the regrowth of China, Malaysia country, and then hopefully share some thoughts on how to build our own resilience and thrive. We will need to step back to understand the big picture of a fast-changing ecosystem, and connect the dots to understand the impact on our respective roles and responsibilities. It's important for us to forget the noise, the small details, and move to think of the future, the parallel factors that interact and correlate and associate with each other, and apply a bit of categorical thinking as well as critical thinking. Ultimately, I believe it is all up to our own resilience to own the game. Personally, for ourselves, our families, the business that we run, and obviously, hopefully, the country's success as well. So as a caveat emptor, I just want to remind that I'm not giving solutions or giving answers, but hopefully will allow the takeaways that you will do the critical thinking to reflect on what events in the last 3 months have impacted you and the choices that you will make going forward. So as we speak today, it is actually, as we speak right now, it is that we see that the government has announced the slowly opening up of the economy stage by stage. So how realistic are we in setting and going forward? How do we want to set in our old thinking, confront the realities in front of us? And I always believe that we need to listen to high frequency data, facts, cut through the noise, and obviously a lot of the fake news that is happening, and hopefully that we have clarity in our mind. We need to obviously understand the implications to the country, to the policymakers, the businesses, the startup, the entrepreneurs, the SMEs, the working executives, the communities, and even the NGOs and civil society. But there will always be crises, and we can see that over the cycles. Actually, it's when you have crisis that you have opportunities to thrive too. So not all is doom and gloom. I'm hopeful that we'll recover just like what we did after World War II. So it is good for us to walk back and see how we have arrived here in the world economy, and of course Malaysia, very much interconnected to the global stage. How has the world picture and the big picture changed, and the implications to each one of us? So let us take a glimpse back so that we can look forward, and glimpse of the past cycles. So beyond the pandemic of COVID-19, actually the world is already mired in heavy debt. Before January 2020, the US has been on a boom for the last 10 years. The rest of the world was chugging along with very tepid growth, and China's growth in the last 12 months has actually started to slow. So the US growth was primarily driven by the financial markets, and at the same time, the US had tremendous amount of high yield and leverage loans and corporate bonds totaling about US 5 trillion. Having said that, I have not even talked about EU or Japan, which since 2008, they have been having the stimulus, and all across the globe, there's been a relative basis, tremendous amount of debt. So I always believe that we need to understand cycles. If you look through the history of the world, there has been many cycles over 100 years. The longer you can look back, the further you can look forward. And understanding of the cycles will let us also understand what drove economic growth, what drove innovation and progress over the last 100 years. There was a Great Depression in 1930s, and then before that there was the Roaring 20s. And then over the years, we have the Japan bubble in 1988, then the Asian financial crisis in 1997, then the tech bubble in year 2000, and obviously the most recent was the global financial crisis in 2008. Now this is exactly 11 years after 2008, I call it the COVID bubble. In between that, if we watch the noise and the signals, there was obviously quite clear some tipping points in what happened when UK decided to get out of Brexit and when Trump won the elections in 4 years ago. So you're beginning to see the polarization and the nationalism, the racism with Trump coming on stage. So the history of cycles forces us to think that disruptions happen every so often. So in some ways, we should expect a disruption in a cycle. But maybe in this case, it was overdue, and this time it is very hard. Because since 2008, it was quite clear that the amount of debt that was piling up across the easy money from the Fed, people have been predicting bubbles way back in 2013. So what is bubbles? Bubbles begin when stocks of financial assets grow faster than the more linear fundamental trends that we see mathematically. So greed and speculation adds to it. Cheap money obviously adds to it. So we have an exponential rise in debt to fund the Dow Jones, as well as the consequential effects on overvaluation in property and all asset classes. So obviously, the greater the bubble, the greater will be the burst. So if you look at the last crisis in 2008, the Fed's balance sheet has grown up to about 4.55 billion. And the QE, with the heavy debt that we see, we have never able to actually try to normalize the interest rate. And many of us may not have realized that in September 2015, that when the Fed lowered the interest rate with a view that there was a weakness in global growth and trade, at the same time as they lowered the interest rate on excess reserves of the banks and injected 75 billion of liquidity to ease a very localized situational tightening of the markets in the US. A lot of us didn't notice that, because when they did that, the stock market normally would have moved up, but it actually dropped. That was the sign that they themselves beginning to see there were some issues. That was in September 2019. But obviously, all the hype of the CNBC and all the institutional funds continued to prop up the market. Then in January 2020, COVID-19 arrived. So COVID-19 probably is the probable straw that broke the camel's back, because the financial markets at this time was already very high. But unfortunately, this time it's not just the financial markets. In 2008, the fallout was the financial market, but this time it's the entire economy. Most economies in Southeast Asia, even in Malaysia, were already slowing down since 2017. And albeit you give it to Philippines and Vietnam, they're growing faster. Malaysia, Bank Negara, lowered its OPR rate in January the 22nd and March the 3rd, because they saw the weak global trade affecting domestic demand and investment activity. So all along, in the last 2-3 years, even for Malaysia, in fact, the last 5 years, we have actually been having a very accommodative monetary policy that shows signs that the economy itself was already tepid. So as the US unveiled the programs to pump trillions into the economy, when you see the latest, when they put the 2 trillion funds into the economy, it was so fast a decision. Unlike during Obama's time, they took so long to even get funds to help the banks. But the reason behind that is that they're supposed to support the flow of credit and liquidity into the system. But unfortunately, I'm sorry to say, the big institutions and the large funds will be the ones who will be getting the money first, not the real businesses. But nevertheless, let me carry on. The interest rates obviously have been very low, in the lowest in the history of the world. Debt levels are very high. Policy missteps were very clear. Fed will continue to print. And today, the US government has a deficit of 20%. Yet they're preaching to the rest of the world who are in the 3 to 5%. We have to watch our deficit. So the confidence in the US dollar is something that in many ways is because of the perception that people think the US dollar is safe and is the global currency, at least for the time being. And in fact, later I will share with you what China has recently announced, and it's beginning to show the signs of the longer term of the US dollars. But what it also means to us is that that while you can see from outside the US dollars financial markets are growing very well, the fact is that they have a deficit of 20%, a fiscal deficit of 20%. Japan has been at zero growth for the last, since in the 1990s. But it has low inflation. There has been a lot of stimulus. They were able to do it from the great savings they had it from the past. So when you go to Japan and see the quality of life there, you don't even realize that they are going through actually a very tepid of almost 20 years of a coma economy. So in the meanwhile, there has been a lending spree across the globe. Private wealth and cheap money means obviously stock markets. Now, when you tell me the Dow Jones at 26,000, yet there is a 26 million registered unemployment, how can this distortion last, and how long can it last? So when the music stops with the lockdown in the US and the Fed keeps on pumping money, this distortion is something for someone like my background of understanding economics, I won't go near anywhere to talk about prices or valuations. That's beyond me. But overall, you cannot help but the fact that the implications on the US dollar in the long run will have something that we have to think about. So commodity prices have been very tepid. In fact, I will quickly just mention, I just read this morning in The Guardian that the Chinese government has just announced that they will not allow US dollar, the settlement of the stock exchange in China to be settled via a peg with the US dollars. They want it to be pegged to the yuan. So that has a lot of implications. I have no time to think about it there, but I'm just telling you that that is a point of why when you don't have the economics, the fundamentals to justify the strength of the US dollars, but just pure confidence, we need to go back to the fundamentals, and that's what China is, I think, being very smart about it. So who's been funding the deficit in the US? Actually, China and Japan and the rest of the world. So who's going to keep on buying the Treasury US bonds as they keep on printing money? I can't give you an answer for that. But what I like to share with you is that, to be fair to the Fed chairman, he was trying very hard to normalize the interest rate post 2008. So in March 20, on March the 3rd, 2020,
Hi, whoever is on the computer and not mute, please mute your computer, please. Thank you.
So in March 16th this year, the Fed actually dropped the interest rate 100 basis points, almost to zero interest rate. That was very close. After March the 3rd, they dropped by 50 basis points. In 2018, 2019, August, September, October, they were also dropping by 25 basis every month. In 2018, they increased 25 basis point every quarter to arrive at 2.25 to 2.50. But they were stopped by the politicians and the Wall Street lobbies in America, and obviously under Trump, and they were not able to normalize. But in some ways, when you look back, it makes sense that that with the arrival of the COVID. But let me just tell you, when we say normalize, what does it mean? In June 2006, US Fed rate was 5.25%. In 2007, it was 4.75%. So when the stock markets, of course, when they reduce interest rate, the stock markets rallied. But the Main Street and the real economy was still not moving in terms of ability to get the benefits of the effects of the cheap money. So then came COVID, they had the 2 trillion, and now the stock market is in the yo-yo. And is it supported on facts and earnings and Main Street economics realities? I find it difficult to agree with that. But then there was another whimper, and that was when the oil price dropped to negative $40.32 for the May WTI at the Oklahoma crude oil. What does that mean? It means that the supplier and the storage of the oil suppliers are prepared to pay $40 for you to take the oil away from the storage. That's what it means. So in any way, the psychology of the investors and the human beings obviously are very short. The stock market has gone back, and so we are now in a situation that all of you are very familiar with. So now I want to move a bit further and say, now we have the lockdown, the economy is shut. So everybody's income across each and every one of us, workers, businesses, all of us are affected. And over and above that, the whole world, the debt is about 30 times more than in 2008. So the stimulus across the world have boosted temporary liquidity and the flow of credit. So long as the pandemic is short, we are fine. But if it goes longer, there's a lot of challenges for a lot of us. So governments will have no choice but to run up and ramp up the fiscal deficit, because it's either a choice of more debt or no economy. So it's actually you need to pump up the economy. So in 3 weeks, what seemed so normal when we all left Chinese New Year, suddenly the world went into chaos. It took 3 years to decline in 2008, normal cycles, but what we saw the decline was in 3 weeks. So can life go back to normal? Borders are closed, airlines are non-existent, travel is non-existent. But I can only say, I'm not a predictor here, but I can only say rapid change is indeed coming. The face of the world will change both in macro and micro levels. So in many ways, we have to reset our expectations. So questions, will there be a recession? Very clear from the data there is question is how big and how deep is this going to be and how long? How many jobs will be lost? And what shape of recovery that we can expect? I don't think anybody can give you an answer until we're quite clear where hopefully the vaccines, the drug trials that we are so dependent on show some good signs. But what is good is that I see across the globe, including us, we are beginning to restart to open up the economy. So whether it's a V shape or L or U shape, nobody can tell. But if you believe in 1 or 2 drug trials that's going to come out in the next 1-2 weeks, there may be a real ramp up, at least in the US stock markets. But therefore, let me share with you the high level macro view of Malaysia. What I'm sharing with you today is to I can share with you is that the high frequency data is something that we must pay attention to. Oh, sorry, I got disturbed by the sound just now. So when I was talking about since 1997, 2008, we are very fortunate today that our banking system is very stable. I remember in 1997, we were all panicking around. The ringgit was going offshoot from 3 to about 4.4, 4.5, 4.8, 4.9. But today, I find the banking system is very stable. Actually, the kudos have to be given to Tan Sri Zati. She did a fantastic job of giving 2 master plans for us. The 2 master plans were very clear, laying out that the bankers must invest to future-proof the business model, to build resilience during good times, so that when stringent times like this, we are able to survive, support the flow of credit and the economy stability, obviously the flow of liquidity. So what we had very stringent compliance and credit matters pertaining to the amount of capital, to the stress scenario that we must put, and to make sure that our business plans, continuity plans, are really going to be able to run well during times like this. And I must say the banks are running very well. And what is also most interesting that a lot of you may not know is that we have got a resolution planning mechanism in place. That means if any one bank is not run properly or really get into trouble, there is a mechanism already in place, that the ability for the system to take over and make sure the system is not affected is well in place. It's called resolution planning, or what we call it in our industry as living will concept. So today we have about 2.7 trillion worth of asset, and our deposits over about quite good. Our deposits and our assets are quite matching, which is good, instead of having assets and no deposits. And in Australia, there is not enough deposits. There are more assets and not enough bank deposits. All their investments are in mutual funds. So that is quite different. Our NPL and our non-performing loans ratio is at a low level. Obviously, it will inch up. Our reserves of the country is as good as what we have been having for the last 110 million. Our savings rate over the last few years have come down to 23%, previously about 35%, but still higher than a lot of countries at 5 to 8%. Our private consumption is about 58% of the economy. So over and above that, while the banking industry is being prepared to handle its own position, there are many mechanisms within central bank and they're in place. We have got the Dana model, the Dana Harta, to handle debt restructuring and recapitalization of good companies, give value to the economy. We also obviously have a lot of small business schemes. And in fact, what Bank Negara has done was to also make sure the bank invests for the future. So we have a lot of fintech and the new digital investments that have been put in place. So a lot of things are happening along the right path. So that itself is so important. Why did I start with talking about this high frequency data on banks? Because without the bank being solid, nothing else, nobody can help. The banks themselves must be solid enough so that the rest the rest of the economy can be able to reach the flow of credit. So some other high frequency data we need to understand. You are running a business, you are running a household. You need to understand your revenue, you need to understand your expenses. So no different from Malaysia as a country. So when you look at Malaysia revenue today, where do we get our revenue? Obviously, we get our revenue from our income tax plus a host of others as well. So we collect revenue. Like in 2019, of course, our total revenue is close to, I think, $500 million. But in terms of about 490, in terms of which taxes itself in 2019, we collected about 190 billion. In 2018, it was about 123 billion. And most of this is actually from income tax, direct income tax, which is about 60% of it. Then we collected about 15% of SSTs of 26 billion. Previously, it was 44 billion. And then the other taxes all add up. The digital tax just started, but that's very small or no insignificant. But what we need to understand is that our tax to GDP ratio is at 14%. The OECD average is about 34%. So, but our tax rates actually relatively in the region is on the higher side. So what it means is that the country needs to grow the base of more wealth, grow the economy, and there'll be more wealth, more income earning people, and then we can collect more taxes. So this is the big picture data that is good for us to understand. Then we need to understand who are paying tax. There are only 2.27 million working individuals out of the 68% labor force that we have 15 million working population, of which only 15% actually pay tax. And out of the companies that we have, there's 1.2 million was registered, about 170,000 companies have been registered. So these are the group of people that actually contributes a significant portion of the revenue of the country. So I want to talk a little bit about the digital giants. So today we have the Amazons of the world, the Facebook of the world, Apple of the world. They operate across the globe. This problem is not just to Malaysia, but to the rest of the world. But they pay disproportionate tax. As you know, France tried to impose a tax and Trump started to put sanctions to them. It's really unfair. But what it means that there is a disconnect between the digital platforms of the huge, large companies that today is unregulated and untaxed. So how is the world in the changing environment that we see going to make sure there is revenue coming from? In fact, what is worse is that they are all very smart, that the algorithms that run these big digital houses is not even understood by a lot of the regulators in the market. We'll cover that a little bit when we talk about the changing environment. Another big data I would like to share is the fiscal deficit. Now, Malaysia's fiscal deficit is about 3.5%. I think it will inch up. Singapore is about 7.9%. Indonesia 5%, Thailand 4%, China is at 8%, and the US at 20%. What does that mean? It means that the revenue you collected minus the expenditure that you have is that shortfall is the deficit. And that's why sometimes when we say that we must make sure that spending is in the right direction. So in the case of to run your business, right? So this deficit hello? Is Allah your...
We can hear you, Dato.
You okay, yeah?
Yeah.
Is Allah the working capital that you look for? So when you run a business, you run your normal working capital is the revenue, the expense, and the timing. But occasionally, when you want to go into capital expenditure or go into investment, you might borrow longer term. But that's what we mean by deficit. Another big data for us to understand is just to see the big context of where we are as a country relative is household debt to GDP. Household debt to GDP is like your core borrowing in running a business, like your overdraft. So for household, that is a very important point. So the country as a whole, as we improve, you need to give that for us to leverage so that we all can grow our, and increase our wealth. At the same time, we must know what is the balance. So household debt for Malaysia is about 82.5%. It has come down for the last year. Singapore is about 64%. Indonesia is 17%. Thailand is 79%. US is 76%. China is 55%. So what it also means is that if you're looking at going outside Malaysia, you see that Indonesia and Philippines has a lot of potential. They are not really that ahead in terms of the development of their consumer banking, and therefore their dependence is lower. And you can understand that because the ownership of homes is not like what we have in Malaysia. We're all living quite comfortably here. Another data we need to understand so that we can come back to the big picture that I want is how dependent Malaysia is and the rest of the world on exports and trade. So Malaysia exports is about 65%, and our trade is about 123%. China exports, surprisingly, because such a big country, is about 22%. US is only 12%. Singapore is 174%, just like Hong Kong is at 210% because they do a lot of entrepot. So Vietnam is increasing to 87%. So that gives us an idea about the interconnectedness of our country. And now we will go and talk a little bit about, I call it income divide. Some people call it as inequality of income distribution. This is normally measured by the Gini coefficient. Malaysia's Gini coefficient is actually 0.43, which is actually quite good compared to the lower it is, the better. I think the Nordic countries is about 0.25, and the extreme is about 0.89. So we are not too bad. But what is, I think, we need to understand is whether the increase in the wealth in the last 10 years has benefited a proper distribution that we have a good middle class, a rising middle class. At the same time, the lower bottom has to be sustained in a sensible manner. So obviously, like in all countries across the globe, the top 10% of the income control anything from 38 to 80% of the economy, depending on which country that you talk about. And the poorest 10% control anything from 1.5 to about 6%. So the inequality gap is happening throughout the world, and it's not just in Asia. So the upward mobility, the social progress is difficult, especially when you don't come from parents that had the opportunity to be educated. I mean, there are obviously situations whereby that's why education has to be free for everybody. So upward mobility and social progress has to be very important for any policymaker, especially going forward. So this pandemic obviously will accentuate the gap, and it's a source of concern and challenge for all policymakers. So like when we talk about the Bantuan Sara Hidup one-off initiatives, these things matters because literally these people don't have income, and especially when we are talking about the day workers as well. So the US, we are relatively much more stable, and Asia is so much more stable than what you see in the US. They don't even have two to $300 to last for a few days for the average man on the street. So we will see, maybe down the road, you will see the topic of a social net or the universal, what do they call it, universal basic income will be increasingly a topic of the day. So why is it that people like Nordic countries could have such good distribution income? And that's why they can go about, because they are educated or well learned, so they can go about their better levels of solidarity, like, supposedly. And their philosophy is about preserving enterprise, economic autonomy. And they are also, to be fair, small and culturally homogeneous, unlike like here we have a diverse of cultures, ethnicity as well. So I guess beyond the stimulus that is temporary, the deep fault lines must be addressed by the policymakers. So let's then go on and see, how does the US stimulus, in some ways the US stimulus have implications to the rest of the world. It makes other countries more confident to start to say, I have to incur more debt and to dish out, to save my people first. The economy has to restart at the right time. But actually it's ludicrous when you read about the US, where some of the big companies have taken the money and now being pressured to return. But those monies, the large companies were using it to buy share buyback. Share buyback was 1 trillion in the last 5 years. And dividends, so their business margin were low, they don't keep enough to go through difficult times. It's just that for us, if we don't save, today this is a test of telling you why your personal savings is important. So we are now back again to 2008. So in 2008, when it was stated that, oh, we all will bail out the bankers, we will make sure we will reprimand them and watch their behavior, it is not happening. So human greed comes in again. So structural reforms at the banking system may have started, but the behavior of how to take some risks still continues to be very, very strong. So we need to whet those appetite to be much more mediocre in that sense. So there's a long way for the economy to grow. So as a result of this, national debt across the world go up. Obviously, sovereign debt will go up. So in the poorer countries over the years, it's even tougher. I was watching a video in Ecuador. It's terrible. The bodies were on the streets. Why? Their country is so poor. Because they went through sovereign debt bouts how many times around. So somewhere along the line, there will be sovereign debt issues and sovereign debt challenges across the globe. So when we see our Bank Negara and the government coming up with the Prihatin funds and the SME funds, that itself shows that we were quite bold. We came up close to about 4% of our GDP value for the 250 billion funds. Japan came up to about 11% of the GDP. US came up to 20% of the GDP. Singapore, I can't remember the number. It was quite a high number as well. So it was so unusual for people to give wage subsidy to retain employment and all that. So it tells you the depth of it. In fact, right now, the US Congress is debating as to what that they realize that they have dished out maybe quite a bit. Now that they have to dish out more. So now they have time to start now and think, hey, let's think back who actually needs to be safe or who doesn't needs to be safe. So those are the issues that is on the table. So this issue of putting the big data across what the interconnected with the world, I hope give you one aspect of how do you see the implications on you and your business, and also understanding the implications on the country and understanding what the policymakers can and cannot do. So the next part of this change of COVID, obviously already happening, is understanding that when the fourth industrial revolution started in the 21st century that we call ourselves, we already see that there was a lot of talk about the future of jobs. That the future of jobs will be lost to AI, robotics, all kinds of smart homes, factories, smart cities, and all that. And that existing jobs itself require reskilling. Don't even talk about whether we are producing the right graduates to match the jobs of the day. In fact, I went to Vegas in January 2018 for the largest consumer electronics show in the world. This is called the CES Electronics. I went to the section for AI, and believe it or not, and that's why I talk about this, is because when you see that the whole AY, all the vendors and the people who showcases their innovation, 99.2% was from China. The rest of the world was not even there in terms of AI. So that statement that I just made is to tell you that we must respect what China is going to be or what China is doing going forward. So we have to prepare ourselves. We are very near to China rather than to the US. We can benefit from China's prosperity, and how do we make sure that we ride along with them as they move along and adapt ourselves to be able to leverage on their success and their growth. So other than the reskilling of existing workforce, there is a massive World Economic Forum agenda on this, of how companies should set aside monies and how governments should help the reskilling. Then there is whether we have the right outcomes from the education and the schooling system that we have. So when we talk that, okay, we all want to have an MBA and a doctorate, today there's a lot more talk, even in Singapore, towards vocational education, STEM education, and so that when we lose our jobs to the AI, there are other things that we can also make sure that we can be able to survive. Now, if you listen to Jack Ma, he will say that why are we all rushing to go and do those certain subjects, and I tend to agree with him that it's supposed to be given. That means for our generation, we may not see it, but for our grandchildren's generation, our children who are much younger, for those millennials of young children, AI and the robots and all those technology will be given. Given means it will be the norm for these children when they grow up into the workforce. So what is it that we think that they need to equip themselves? That's something we need to think about. In the meantime, today there's a lot of anger against migrant workers, against refugees across the globe, because suddenly we wake up to the fact that we need jobs and we don't have jobs. But because we have moved ahead, the poorer countries have provided the labor, and now they are in your respective countries. And how do you make sure that you cater for that? So what is important is that we must continue to have robust economic growth. That is the best answer, but how to do that, nobody can give us, especially post-pandemic. So will there be enough jobs? That's one thing. So in terms of the mismatching that I said, but what is interesting is that the rise of the middle class today, especially from urbanization, it has slowed down in the last 2 years, but even in China, is growing tremendously. So the mindsets of this new middle class of also more attuned towards the ethical economy, towards more ethical and purposeful companies they want to invest in. the way they look at their own consumption are things that you and I have to bear in mind. The kind of jobs, kind of businesses that can be open to do that. In fact, the World Economic Forum thinks that globally there would be about 800 million job displacement, 800 million, requiring about 400 million to switch occupational categories. So taking away your normal titles, your normal roles, your vice president, your MD titles may be something that is going to be the norm. So it's reshaping the workplace, but the nature of work. But there will always be good talent that is required. So as we reduce cost as part of the process to survive, we need to understand where are the talent gaps for the future economy is required, and how to retain and rebuild them and make sure they are around for you to take advantage of the new world. So the new shopping practices and new e-commerce require different types of skill sets. So when you look back, if that is to be given that technology is going to be everywhere, not immediate, at least 10 years or 15 years from now, we're preparing for ourselves, what type of skills do we need to have then? I think beyond those technical skills, it is given, assuming we do STEM as a basic core out to graduate out of schools, and assuming that we do a lot of engineering and mathematics, then the type of skills is, for us, how do we outsmart the AI, is to make sure that we can grow up in a world to be able to communicate well, to have cognitive skills, for you to have logical reasoning, mathematical reasoning, creativity. You're able to visualize and connect the big picture, category thinking and connecting the dots, able to make your own judgment and decisionings, interconnections of interpersonal communication skills are important. And most important thing is also embracing change. So what type of education degree will require that? I always believe that maybe psychology, not so much as all the silo technical skills. So this is the future of jobs. Again, I hope that I've shared with you one aspect of the world that we need to pay, of the data we need to pay attention to. The next thing is for us to also try to understand and watch the noise and the signals from the trends and the winners that are coming out that are may be obvious and may not be obvious. I mean, so the trends are very obvious, the growth of China, and now what post-COVID, how is China going to pivot? That's one point that we must pay a lot of attention to. Because China's new millionaires and billionaires today will be coming more to Asia to spend their money. So there may be a lot more acquisitions from this part of the world rather than they going to the US. Discretionary consumption itself may take a different pattern, but it will be there as long as China is growing. And the baby boomer spending is people like me. I consider myself a baby boomer. We have saved a lot, so we have the spending power. But the young millennials today will have a much different spending power than their parents are today. So one of the trends that I will share with you, you'll be very surprised, is that Malaysia is actually quite ahead in the e-commerce world. And actually, we are among the top 2 in the world showing in terms of growth in grocery shopping. We had US 483 million of the world's total 21 billion US of total grocery shopping. This is a trend that we all must capitalize on. Of course, there's a lot of implications on the last mile delivery of platforms. There are many platforms, I'm sure you all are aware that, and obviously one platform that I use a lot is called GoGet. So a little bit of marketing here. Okay, so Malaysia has 26 million people use e-commerce. For people aged 16 to 64 years. And they spend US 6 billion on the e-commerce channel. So Malaysia's ARPU for e-commerce is US $159. What is ARPU? Is average revenue per user. That means each Malaysia, each person who goes e-commerce spend US $159 versus the average global of US $634. That means if we embrace e-commerce marketing a lot, that means the trend can go up to US 600. So there's a lot of room there. So there's a lot of massive opportunity for us to get accustomed to digital shopping, working and collaboration, combine human and machine learning. We will also see a long-term acceleration of movement, a longer term from all kinds of services, from work, education, healthcare, entertainment. And this is going to be quite normal. In fact, a lot of us today have already started the testing by the lockdowns. Okay, let's understand a little bit also about the disruption of the supply chain. So clearly, without going too deep into it, what it means is that people are now big business are beginning to ask, hey, am I just in line inventory, and then the stoppage, the cutting cost, have I gone too far? Should I now bring the supply chain nearer to my region, within the satellites, build a satellites within my region, instead of just looking at pure cost alone? So you need to measure your resilience and your buffers against diversity, modularity, your business models, and just-in-time efficiency. And how do you adapt to all that? You see, so that's quite clear. So because of that, the big companies today, the power of the bigger companies are going to get bigger. So, as I said earlier, a lot of people realize that as you go in the digital economy, you need to scale. Without scale, you can't reach scale. Digital, you need scale to be impactful. So those people who control data, the winners are those people who can control data. They are the concentrations of influence that will revolutionize every economic sector, from health or transport. So you will find that that the big companies get bigger. If I tell you that there's 1 trillion of cash pile up today, combination of Alphabet, Amazon, Apple, Facebook, and Microsoft, just on their cash coffers alone. And that is, they have not come to Asia in a big way yet. In the private equity funds, there's 1.5 trillion funds waiting to invest. So go back and think through what is it they can sell your ideas to the private equity funds. Blackstone itself at 500 billion. So the next boom after the COVID, I think will be more towards Asia. I'm saying this from looking at data, because I think the US is going to be mired in a lot of debt, except for the financial markets. And when the music stops, I don't understand that enough. But I think the emerging markets, we have strong demographics. I told you about Indonesia, Philippines, and even here, there's more than 1.2 billion are online in China. E-commerce in China itself with US 2 trillion. South Korea and China itself 25% of the world's e-commerce. So consumption and urbanization in emerging markets will drive the consumption in this part of the world. So we have a better chance to recover than the West. Earlier, when we talked about the winners, this is something that I don't need to spend time on. I know you all are quite familiar with the type of industries, any form of technology, iCloud services, new platforms, data analytics, the food industry, the water industry, education, healthcare, any form of changing lifestyles, from education to travel. How do you actually do that? And the millennials are the ones who will do that. But what is interesting is that you'll find that a lot of people will decide to say, I will now have my small enterprise. I'm happy, because even if I go to work, my job is still not guaranteed like before. So there will be a lot of bottom-up individual enterprises on online platforms. They're going to be agile, that they're all going to be across all sectors. So over time, we will have spheres of leadership and spheres of influences across the digital space. And people will be asset light, and probably in the real estate market, for the time being, they have to go through a tough period, but I think there may be even a tendency to rent rather than own. So that's one high data that I've just shared about the trends. And a very important part that I really wanted to share is about to watch China. Now, if you watch China, how are they going to renew and how they're going to pivot? Today, China has started the economy a month ahead of the rest of us. The clues on the rest of the world will be from China. So while we watch China, it's too early to say that they have a very good March upstart, but in April they begin to see some declines. But what I wanted to share with you is if you are familiar with, it's a thing people may not realize that China in the last month has rolled out its legal digital currency electronic payments, DCEP. No speculation is allowed. It's issued through banks, through the central bank, and then through banks later. The banks will issue, and they will implement throughout all systems. So people like WeChat, WePay, Alipay will all have to accept it as well. Those DCEP is a sovereign issue currency, and the merchants mandated to accept as well. So all the credit card merchants are also mandated to accept. So it's the top level design completed, and now they are doing the testing with the telcos and the banks in China. It is spec 1:1 to the ringgit, so at 1:1 to yuan. And it's going to reach international reach, and I tell you at the right time, it will be a global currency. The central bank in China has also adopted blockchain. But what is interesting is that just now, as I said, with this DCEP, and over time, they have announced just talk that in the China stock market, they will only allow you to pay through pegged to the yuan. That's a lot of implications. I don't have the details right now, but I've just saw that high frequency data streaming into my phone. So going forward, I think for a while, aggregate supply and demand will be lower, while the factories are back and China wants to revamp back to its old production. The world's aggregate demand may not be there. But China has a lot of potential to do. There's a lot of inner growth that they have yet to tap. In fact, they have close to about 700 million people that are still below poverty line. They have a lot of the internal tourism that has not been developed yet. So a lot of the urban activities are going into now to move into the provinces rather than coming to the city. That type of growth will happen to China in a big way. So as a result of that, they will build a huge middle class, even bigger than where they are today. Domestic consumption will grow. They will use their own currency, and everything is very much traceable and on the platform. It's a totally different world altogether. So the world may shift. Their financial system is one thing they're building on. So because of what they are going through today, I think they will build their own ecosystem of medical sciences on the pharmaceuticals. Because for all the good work, in some ways, they've been blamed. So it's a bit unfortunate. So you might as well grow your own. That's how I read the data that's coming out from China. So in what way, there will be some form of decoupling. But it's not so simple as I say that, because the US is still a big financial market, and the big funds are still there for the time being. You still need the big US hedge funds, the big S investors as well. So Belt and Road, for which China has been doing, I think may take a more subdued form because the superpowers are brainwashing the poorer countries. So while US is trumping that they want to bring manufacturing back to the country, I think that's a long way to go to it. So I pause and I will talk a little bit about the role of government. So going forward, whether we like it or not, they talk about capitalism, or don't let the government come in. Unfortunately, I think the role of policymakers and government is going to get bigger across the globe. And I think we were all getting more regionalized. There will be more fiscal stimulus, as I said. But the government needs to think where are they going to spend money to make sure that the below 40 are taken care of, to make sure that the inequality across the globe, all governments have to look at that. Then they have to relook at how they do the town and city planning, they have to have policies to incentivize the new sectors that I just shared that is going to be the new economy. So patterns of consumption, patterns of businesses, how they require response from the government, from the private sector. So we all have to adapt to take up this challenge and benefit. Don't look at it as a challenge, look at it as an opportunity by all and each and every one of us. So how do we go about getting these things done? So the policy makers, heads of businesses, and you as individuals, your leadership is critical. You as individuals, as the household income earner, your leadership is equally critical. We have our own bias to emotions and resistance to change. I know that that's normal, but I think we also need to gain new perspective. Stay with the facts. Past experience is not necessary. It's not necessary the future, but at the end of the day, what is important is that past is not necessary will be the upbringing, but we learn to adapt. So I won't go too much of what business owner in terms of the time, what business owner needs to do or what each individual needs to do. I think you've heard that enough. But I can only conclude by saying that we have to reset our expectations and move forward. The falling asset opportunity is to buy. As to what your situation is, I can't give you advice. So in conclusion, I can say that the increasing role of the government in the economy, economic nationalism, Asia will do better. We must stay nimble. And on an optimistic note, there will be recovery. If countries can continue to cooperate and support, it will be faster. Otherwise, it will be slower. Never underestimate the power of technology, the power of markets, and the power of human ingenuity. At the same time, we also have very short memories. So I'm confident that we will all recover very well. The crisis will pass. We will witness more positive social, economic, and technological developments. So I hope I have shared some themes and perspectives for you to take away and do your own thinking and your own implications, and both from a micro and macro point of view. I know each and every one of us will win and can win. I wish you luck, and with that, I will close for Q&A. Thank you.
What an amazing and fruitful sharing. Thank you, Datuk Yvonne, for your time. Now let's open the floor to our guests for a Q&A session. I've seen some questions on the chat. So Datuk Yvonne, there's one question here from Becky Lau. Her question is, based on the current economy trend, what is the forecast, example, how long it takes for Malaysia to be back on track? Datuk?
Yes, I can't give you an answer to that. Nobody can actually across the globe. But what we can say is that we at least are beginning to open the economy a little bit, and we are very dependent on how the vaccine goes about. Even if we open everything today, the rest of the world are not open. As I said earlier, it's not possible to give you an estimate of the time. It will depend. If we find a vaccine very fast, assuming some people feel that it may be very fast. But if not, we have to slowly open up the economy. It's a question of how long will that bottom be, whether a year, 2 years, 6 months. That's the question. But it's definitely going to be down.
Second question we have is from Wong. Please advise the job opportunities related to AI and robotics.
AI and robotics, the job opportunities. From what I sit on a board, and whenever I look at the vacancies that they have, it's a lot to do about the research, the analytics that is done to make sure that the robot can behave the way you want. So if you want to say work in a robot, prepare for the arrival of AI, is go to data analytics, mathematics, computer science.
Okay. The third question is from Mr. Wong Tak Cheong. How do you see China's unpegging of the USD will impact global economic recovery post-COVID-19?
Too early for me to give you answer because I just read it just streamed out today, and there's not enough information. It's just only talk. There's not enough information as to which part of it would they start with. It's not easy to unpack the US dollar. It will take years. It's not easy. It's not easy.
Question number 4. What is your view on the pre-Hutton fund stimulus package introduced by government, and how effective do you see this in helping the poor? This is a question from Kelly.
Oh, I think I'm actually I'm actually impressed that we got our pre-Hutton package very fast. And if we look at it, there's also wage subsidy to retain jobs. There's also direct help to the B40. I have to say, it is done, in my experience, from what I hear from my SME friends and customers, they're actually very happy about it. In fact, after that, there was a dialogue that went on with the SME. So in Bank Negara, they have come up with the CGC forms. There are a lot of tools going on for BIS Wanita, BIS Islamic, and a lot. Relatively, as I said, because we are not panicking like in 1997, this time around, I'm quite impressed, and it's going down the economy.
Thank you, Dato. Dato, just a message from our organizer. Would you mind putting on your camera?
Is the camera not on?
No, I think you turned it off by accident. Okay.
Is it on?
Yes, now I can see you. Question number 5 is from Ngo Chi Hung. Dato, do you think that our government has done enough to encourage e-commerce, and what we can do to further encourage this sector's growth?
Oh, regarding e-commerce, we are way ahead. If you look at, let's look about e-commerce. As I said, because we are quite way ahead, that's why you can see the grocery online shopping and the e-commerce statistics of Malaysia today. In the financial area, the fintech is we are on par or even better. If you look at how we go about doing our EPF, how we go about doing our income tax, how we're going doing our passports, those are e-platform. We are actually ahead of a lot of people. On the e-commerce side, it's quite a global technology. The government has also encouraged to MDEC and to the cradle funds that we have, that and to a lot of the funds to actually move people to go into technology. MDEC and the MEFCAF all have done that. And when you look back, I think Malaysia is way ahead in terms of technology. Very few countries probably, whether we were able to scale it to catch market share, is whether your idea in the e-commerce, which is a global competition, is a different level. But encouraging e-commerce, encouraging any form on the digital platform is a thing of the day. That's why we have the 4th Industrial Revolution Council.
Thank you, Dato. The next question is from YF Chan. Her question is, many makcik Kia look forward to receive the PPN supports, i.e. moratorium, SME loans, etc. But it will take some time before this can happen. What do you think the impact to the economy, especially at the slow phase anticipated?
I don't understand the question. I don't get the question. I don't understand the question. What is the question again?
She wrote here, many makcik Kia look forward to receive the BPN supports, i.e. moratorium, SME loans, etc. But it will take some time before this can happen. What do you think the impact to the economy, especially at the slow phase anticipated?
I still don't understand the question, but what I think I can do is I can explain what a moratorium is. The moratorium means that you defer your loan over a 4-month period. It doesn't mean that you don't pay. You pay later. The rest of the question I don't understand.
Okay, fair enough. The next question would be, many people have or are on the verge of losing their jobs in industries that are biting the dust. Example, hotel, tourism, airlines, etc. What about banks?
No, too early to say. As I said, so far what we have seen is the banks will obviously, the banks, as I said, we are a lot more advanced. We have ongoing have uh, our own efficiency program. I can't speak for any banks per se, but overall, like any business, if this pandemic goes on for 2 years, 3 years, whichever company is will also have to downsize. So it's I can't answer for that.
Okay. Um, the next one is actually a message from you from Datuk Paul Chan. Datuk, congratulations to your insightful discourse. As usual, sharp and crisp. As always, a realist. Thank you, Dr. Paul. The next question. Given that Malaysia has had a double whammy given the change in the government twice in a very short period, how would that delay or impact Malaysia's recovery?
I can't answer the question on politics, but what I can only say is that if I look at the way the pre-Hutton has been dispensed, I see there seem to be a smooth running of the government. From a perspective of a person on the ground, that's the outcome I look for.
Okay. Um, the next question is, Dear Datuk, do you think USD will continue to be strong or weaker in long term?
Today, why is the US dollar so strong? It's actually a currency of confidence. It will continue to be strong for a while because it's just what you believe. If I tell you something is black, you want to say it is red, you will always think it's red. So even if the black has better value, you won't go because you believe it's red. So anyway, fortunately for the US, if not for their currency, it's going to be tough. Their currency is just, and all of us are partly to blame. Everybody across the globe welcome the US. It's up to us not to welcome the US currency. So I call it a trust and confidence.
Thank you, Dato. The next question is, the stock market has rallied very positively recently. How do you correlate that the recession views? Which side do you sit on, and how do you make sense of the positive risk appetite in the financial market, particularly in semiconductor, 5G stocks, and tech cloud?
As I said, as what Bill Gates says, the same thing. We are not stock market specialists here. But if you heard what I said just now, is that the stock markets in the US, the way it is going up does not jive with the logic of the real market. So today, I see that obviously because the shares have all been driven down so badly, it will go up a bit, right? Just anything that is bottom will move up. But whether it's long-term short, I can't say. But only thing I can tell you is that volatility will be the name of the game for a while, whether it's in the stock markets or the bond markets.
Thank you, Dato. Now we have two more questions from the chat. How can a business psychology degree equip future leaders to solve problems in the workplace?
Repeat, please.
How can a business psychology degree equip future leaders to solve problems in the workplace?
A business degree, in my view, is quite a general degree. So pardon me if I sound a little bit arrogant here. Because we cover everything is a bit of business, a bit of economics, a bit of this.
Sorry, Dato. The question was business psychology, not business.
Oh, okay. If it's business psychology, I think it's a good degree because I like psychology because psychology is a study of behavior and the implications. And if you have a strong mathematics and engineering background, you will have the ability to connect the dots and do very good categorical thinking. At the end of the day, you can have a good degree, but if you don't have the other soft skills to to get the degree live into the real world to give you the actual impact, it is also of no use. So it's a balance of everything. I mean, a lot of people with no degrees have innovated. A lot of people with degrees refuse to change and have not done well. So there's a combination of everything.
Thank you, Dato. The next one is, how do you see the Bursa Malaysia for the rest of the year?
I thought I just gave the answer. It's called volatility. Across the globe, yeah.
Okay, this is the last one that I have on the chat by Charlene. The pandemic has exposed weaknesses in the current global investment priorities. Where will environmental and social concerns sit among business priorities post-COVID? Will there be a push towards ECG as a foundation for resilience? Will it be seen as a necessity?
This is a very good question. Because you see, a lot of us were thinking, even something where we say, wow, women matters also doesn't matter now, is it? So I think the thing is, I like to see it slightly differently. I see that my takeaway from this is that the world wakes up, suddenly family is more important, the air is more important, health is more important. And then the solidarity also seems to be coming together. So today, investors going forward will only want to invest in companies that have a good purpose. Their value and purpose is going to be key. Their value and purpose about whether are you an ethical company, are you just making pure profits without making sure that the community that you serve has also have their fair share of their contribution, as well as climate change. I think that is going to be even more. But for the first 1 year, while we are all trying to survive, you may not see that, Charlene, but you will see it when things have settled down, and you'll find that trust to go back to ESG lending, ESG investment is going to happen. A lot of banks today have set up funds especially just to do ESG. And they're also lending to companies that meet that standards. No, I think it's going to be alive, but you will see that it seems suddenly dead. But don't forget, we are all trying to survive first. So let us survive, get our feet back, then we can definitely go back to that. I'm confident of that.
We have a new question from Zach. Thanks, Datuk, for your insight. What are your thoughts on how COVID-19 will impact the move to digital banking?
Oh, it's already on. Digital banking is the least impacted because digital banking is already on in a big way. In fact, banks like Standard Chartered, for example, today, if you are investing in our wealth management products, we are on the phone with you via video conferencing about how you unwind or you want to do new investments. We do real on-time boarding on housing loans. So payments, JomPay is so popular. So digital banking is already in Malaysia in a big way. In fact, with the COVID, the banks have been operating very normally.
Thank you, Dato'. This is the new question from Yang. How does a sole breadwinner protect savings and investment in order to survive or emerge stronger out of this recession?
Oh, you need to know where your priorities are. What is basic obligations, food on the table and all, and the rest becomes nice. So if that is an issue, and depending on your situation, I can't give a specific answer, because if I have savings, I probably have some room to go. But what is important for you to take away from this talk is for ask yourself is, maybe you may even have to change your job. Because your job, as you see, may be there for the next 1 year, may not be around. You have to start planning this kind of things. That's why I hope this talk will help you to go back and think, oh my God, what's the implications on my job? Now I'm up here, everything looks okay. 3 months, 6 months, a year down the road, I'm not sure. Because a lot of things are being disintermediated. So it's not, so my answer to that question will be, yes, for the meantime, it's about survival, but you have to look forward and say, where are you working? What is your situation? Is your business or sector going to be around? Those are the questions you have to ask. And you got to pivot yourself, change, reskill, retrain. Forget about what the world thinks about you. Just think about you and your family.
Thank you, Dato. This is from Lim Hock Chai. He's asking any takeaway from for Help University.
Any takeaway from Hutton University? I have to say that I'm actually very impressed with the kind of courses that Help University have provided. When I was sitting down and chat with Datin and Prof. Datuk Dr. Paul Chan. And from what I look through some of the places that I sit on the boards and the graduates that we have, and once in a while I ask, where are you from? They say, I'm from Hutton University. So we get a good impression of the kind of graduates that you all bring out to the market. That's good.
Thank you, Dato. Now we have a last question. Yes. It's always said when it rains, the bank will pull back the umbrella. Aside from Prihatin, many SMEs have yet to get approval from the RM 10 billion allocated under SRF. Only RM 4 billion was released. When can bank ease on the financing to all struggling SMEs out there?
Yeah, I think that's a good question, and that's a realistic question. But at the end of the day, I always believe in this. In my whole career in banking, it's been this. If you got, first and foremost, I didn't have the time to talk a bit more of the businesses. But first and foremost, as a business person, you have to ask yourself where your situation is. Always engage with your banker and make sure your case is put on the table. Who are bankers? Bankers are also human beings, right? It's just that we do have certain protocol to go through. I'm confident that this time around, the banks don't, it's not like in 1997. In 1997, we were trying to survive ourselves. So now we are making sure that as we have good money, we must make sure the good money goes to the right businesses that will continue to be around. Those people are already in high debt. It's difficult for them to survive, whether you're in business or even as an individual. And those people who already their business models were not able to survive pre-COVID also cannot survive. So I do not know this case, but I can only suggest that you engage your respective banker. And there's always central bank for you to go to. There is the arbitrage. There are a lot of avenues today, because today we all also want to have customers on our books. Obviously, everything has to be sensible and prudent. Don't forget, we have your deposits to take care of. We have to be prudent.
Thank you, Dato. Thank you so much for the insight. And to close this session, I would like to invite Datuk Dr. Paul Chan to give a few words.
Hi, Datuk Yvonne.
Yes.
And participants. I understand that there are close to 400 participants. And actually, many complain they can't get into this talk. That shows the charisma you carry. And of course, many people know your background. Over the years, I've heard so many things from you. You are a total realist, pragmatic, and a very entrepreneurial person. I wish the government would make good use of you as an advisor to help the country. So many would have benefited from your helicopter view about so many global issues. And of course, we are impressed by your mastery of facts, figures, but more importantly, how you analyze and synthesize them into a coherent perspective for decision making. And I do agree with you on the importance of China, that we cannot ignore what is happening over there. Whether we design our new curricula in Help University or the upskilling and reskilling in order to improve our personal development, we have to connect in many ways to what's happening in China. Like it or not, they have the determination and discipline to move forward. And again, we congratulate you and thank you so much for your precious time. Thank you, Datuk.
Thank you, everybody, and thank you, Doc, for giving me an opportunity to share with the young.
Datuk,
Yeah.
can we have another session with you?
I have to think first. Let me think through.
Okay, everybody will want it.
We do a slightly different topic, though.
Sure. Come back to us fast. I'll give you a call very soon.
Hey, by the way, okay, I'll send you a note later. Thank you so much.
Okay, bye.
Bye.
Thank you, Dr. Paul. And thank you, Dr. Yvonne. Thank you so much on behalf of Help University, thank you so much for spending the time with us and sharing your thoughts.
Thank you.
Do you have any last words for Help University and your participants?
It's simple, just have fun.
Okay, ladies and gents, thank you for participating in this event on behalf of Help University. I wish you well and have a good rest of the day and weekend. If you can see on your screen, there's a QR code that popped up. We kindly appreciate if you could spare us just a few minutes to provide us your feedback from today's session. Again, my name is Karina. Thank you. Stay safe, take care, and have a good day ahead. Datuk Yvonne, thank you so much, and you are definitely an inspiration.
Thanks, Karina.
Take care. Have a good day.
Thank you.